In this video, we are presenting a trading technique, using BB stop and Fibonacci retracement. This is the chart of GBP/AUD pair for the time frame of H1. Then, we can insert BB stop indicator to the chart. In this case, we can use the default parameters of the indicator. BB stop indicator can clearly shows the bullish and bearish line on the chart. The green line shows the bearish trend as shown here, and then, the orange line shows the bearish trend of the market. Here, we mark the orange line as the bearish trend. The orange line is formed as a series of orange dots representing the movement of the bearish trend. In this case, the first orange dot at the bearish trend is marked as the highest point. It is representing the change of market trend firstly spotted by BB stop indicator. This highest point, later on, will be used by Fibonacci retracement, along with the lowest point, that will be discussed after this. The last dot of the orange bearish line is marked as the lowest point. It is necessary to note that Fibonacci retracement need 2 points, which refers as the highest and the lowest point. After the lowest point, there is a trend change. The green dot appears on the chart. The market changed the trend from bearish to bullish. At this situation, as a trader, we can identify that it is a best time for entry by position. The problem for the trader is, where is the perfect price to entry a buy position, and, until when we hold that position. This problem can be answered by the Fibonacci retracement. Using the highest and the lowest point of the previous orange bearish line, we can activate the Fibonacci retracement. And then, several yellow parallel line appears on the chart. These lines are representing several Fibonacci level, namely 0%, 23.6%, 38.2%, 50%, 61.8% and 100%. Prices may bounce at these levels. Breakout or reversal has the possibility to occur at these levels. In this bullish trend, trader should identify the price where he or she may enter the market, to submit a buy position. The rule for buy position is simple. Entry a buy position when the price cross above the 0% of the Fibonacci level. After buy entry, next problem that need to be answered is when to exit the market. Stop loss can be put at the previous swing low. The level of 23.6% is set as the target point or TP1. In this case the distance between buy entry and TP1 is around 260 pips. If the bullish trend is still strong, TP1 can be adjusted to suit with the current market trend. The strength of bullish trend can be seen from the bullish BB stop line. In this case, target point is moved to the level of 38.2% of Fibonacci retracement. This level is set as TP2. The previous TP1 is set as a new stop loss or SL. Again, by looking at the BB stop bullish line, if the trend is still strong, we can modify this entry to a new position, to maximize the profit. Now, we can set the level of 50% as the new target point or TP3. The new stop loss SL is set at the previous TP2. This process is repeated, if the trend of bullish line is still strong. The new target point is the level of 50% of the Fibonacci retracement. The new stop loss SL is the previous TP. The same process is repeated again and again, until the bullish trend is weak. Or, there is a new bearish trend appear on the chart. In this section, we are going to discuss on how to enter and manage a sell position. After a series of bullish green line, finally the bullish trend is getting weak. An orange dot starting to appear above the candlestick. This is a signal of reversal. This orange dot tells the reader that the trend change is going to happen. The next step is, the first dot of previous bullish BB stop trend, is set as the lowest point. And then, the last dot of the previous bullish BB stop trend, is set as the highest point. These 2 points will be used for the Fibonacci retracement. The Fibonacci level of the current bearish trend is fully determined by the distance between the lowest and the highest points of the previous bullish trend. The next step is, By activating Fibonacci retracement, the Fibonacci level will appear on the chart. It shows the level of 0%, 23.6%, 38.2%, 50%, 61.8% and 100% of possible bouncing or reversal in the current bearish trend. The rule for entry sell position is, if the price crosses below the 0% level, it is the best time to enter the market for sell position. In this sell position, we have to determine the SL and TP. SL is set at the previous swing high. TP is set at the 23.8% level of Fibonacci retracement. After that, we need to look into the BB stop. If the bearish trend is still strong, we modify the TP1 to the level of 38.2% of Fibonacci retracement as TP2. The previous TP1 is set as the new SL. The procedure is repeated. If the trend is still strong, the TP is modified to TP3 at the level of 50% of Fibonacci retracement. The previous TP2 is set as the new SL. The same procedure is taken in determining the TP4 and TP5. If the TP is changed from TP3 to TP4, the previous TP3 is set as the new SL. And then, if the TP is changed from TP4 to TP5, the previous TP4 is set as the new SL.